always be able to kind of recognize us. If you see right next to the Bank of Oklahoma, there's a kind of a meatball that we like to call it, a little symbol. You'll be able to recognize who we are. Go to the next screen. A little bit about us. We're the 41st biggest bank in the nation, so we're a pretty large institution, pretty large bank. We have something in the range of 50 billion in assets as a banking institution. But as you can see there on the left-hand side, and some of the graph is not pulling through, but we're very well diversified. So you may not see us on every bank corner, and you're kind of wondering, hey, how are you so big not on every bank corner? But we're involved in many different industries. On the commercial side, energy, oil, gas is a big piece of our business, mortgage, as well as many other different industries that we're involved in. We also have a 5-star CRA rating. But as you can see in the middle, where we're located is you'll see our footprint there. Now, why are we here? So, BOK Financial, or Bank of Oklahoma and Bank of Texas, are heavily invested into the Native American community. We have over 60 tribal relationships across 15 states, and we have over $1 billion in loans outstanding to different tribal organizations. Now, why have you not really heard about the bank here at Bank of Texas? Maybe a whole lot, and I'll explain that here just a little bit. You'll continue on, Scott. This is some of our relationships that we have. If you see down at the bottom, we've got a loan out to one tribal organization for $500 million, and a number of others that you'll see up there. Right now, we have 225 different syndicated relationships with tribal organizations here in our 15 states. The whole point of this presentation is buying a home. So the first conversation that you've always got to start out with is, should I buy a home? Is buying a home for everybody? Most likely not. Some people, renting is better than buying. And you really have to go through the positives and negatives of, is it worth it to buy right now, or should I continue to rent? And a few things that you should always consider is, one, am I in a place in my life where I'm going to be stable and living there for at least the next few years? Is it likely that you can buy a house today and sell it a year from now? You most likely can, but that may not be the best time to buy a house. So if you see there on the left, it shows you some pros. It's an investment. The whole point of buying a house is that you want to look at it as an investment. You want to buy it today, sell it at some point in time in the future, and make money off of it, right? In most people's cases, they are going to buy it as their first home. They're going to sell it, and then they're going to roll the equity, the money they made off that first home, into their second home or to their third home, and so on and so on. So, and part of this conversation is buying that first home. One of the biggest pieces is, how do I come up with the down payment? Where do I get the funds to buy that initial home so I can get the process started? And that's what we're going to talk about a lot today. The path to ownership. This, if you're going to look at any other screen today, this is probably by far the most important one. We're going to start with number one, building your team. So I'll introduce a few people throughout this presentation. We have a number of loan officers here that can help you throughout the process. John Hawley, right here. Bill Ott, Scott Lewis. I don't think that there's anybody here that has been doing this less than 20 years. So we're very well educated in kind of the home buying process. So building your team is by far the first and most important piece. Along with that team is you're going to need a real estate agent. I heard we have a real estate agent over here. But another important piece of the glue, simply because when you go look at a house, there's many different things that a real estate agent does. They not only just negotiate the price, but they also help you, coordinate everything else involved in buying the process. Who your lender is going to be, who your home inspector is going to be, who your insurance agent is going to be. And those are all individuals and part of the process that you need to be on your side. The second thing is we need to begin the pre-qualification. Now, everybody gets nervous and scared about having a lender pull their credit, but to be honest with you, that is the first thing that needs to happen. You need to reach out to one of us. We will send you a link to our website. You'll go on and fill out your information, and then by the end, you'll hit submit, which gives us authorization to pull your credit report. Once we pull your credit report, once we go over the documentation that you've uploaded to our system, we will then call you and go through all of the steps of the process, from step 1 to step 9. And so we'll either have you come into the office if that's what you prefer, or we'll sit over the phone and kind of talk through it with you over the phone. But having your credit report pulled is the first thing. Because what you don't want to do, and what I've seen too often, unfortunately, is that you go find a real estate agent, the real estate agent shows you a house, you fall in love with it, you're ready to move in, and then we pull your credit report and you're just not ready. And so we want to start the process kind of backwards. We want to start the pre-qualification first. The next thing is we want to talk to you about your savings account. Yes, it is going to need, you're going to need funds to purchase a house. There are many different programs out there that will allow you to purchase a house with maybe no down payment, but you still got to pay for the home inspector. You still got to pay some of your closing costs. There's still many other things that you'll need funds for, and so we just don't want you to expect that you're not going to need any funds. So we'll talk you kind of through that process. Number 4 is to know your numbers. Of course, at the end of the day, you know, you're going to buy this house and you're going to have a monthly payment associated with it, a mortgage payment. And you want to be able to afford that. You don't want to be house poor. So we want to talk you through those numbers and make sure that you're going to be comfortable making this monthly payment. Then we go house hunting. We reach out to the real estate agent. We say, hey, you know, you're approved up to $400,000. Let's go find a house, and she'll help you. You know, find a house, get a contract on the property. Number 6 is make an offer. The real estate agent, again, the realtor will make, you know, set up the offer with the other real estate agent, get a contract signed, so that way we can continue on in the process. Number 7 is your inspection and your appraisal. We're going to send an individual out to the property to verify that the value of the home is at least what you're buying it for. So if you're buying a house for $400,000, we want to know that that home is worth at least $400,000. We don't want you to, you know, buy a house for $400,000 that's worth $300,000, right? So we got an appraiser that will get out there to help you with that. And then number 8 is the fun day. It's the signing day. It's the day that you're actually going to close, and those keys are going to be turned over to you, and it's now going to be your home. And then last but not least, your moving day. That's when you actually are officially moving in. So I went through that extremely quickly, of course, and didn't give you a lot of details on the different steps. So next up, what I'm going to do is I'm going to turn it over to one of our loan officers, John Hawley, to go a little bit more in depth in those processes.
Good morning. Is this working? Yes. Awesome. Thank you so much for being here. Yeah, my name is John Hawley, Bank of Texas. I've been in banking about 30 years, doing mortgages over 20 years now, and this is one of the best programs as far as targeted benefits that we've been able to offer throughout my time in mortgage. So if it fits for you, I certainly hope that you take advantage of it. One thing I want to back up and talk about something Andy said. This is an investment. That's probably the biggest reason for trying to get and be a homeowner is to start building wealth, something that you can pass on to the next generation. For most people, their home is their largest asset that they own. And here's a little fun fact about how wealth can build or how an asset can build. Historically, real estate has appreciated or gained value about 4 to 5% every year historically. If you go back 30, 40 years, real estate's always gained about 4 or 5% a year. Anybody here know about the rule of 72? You take any number, divide it into 72, and that answer is how long it takes that asset to double in value. So 5% goes into 72 about 14, 15 times. So about 14 to 15 years, your home is going to double. If it's earning 5% a year, in about 14 to 15 years, it's going to double in value. So you're building wealth, you're building equity. An example, if you bought a home today for $300,000, 15 years from now, it's going to be worth about $600,000. 15 years from that, it's going to be worth $1.2 million. And so that's how you build wealth, and that's something that you can pass down to the next generation. So I just wanted to kind of put that in your head and understand that this is an investment for you. So what we do to get you started is get you pre-qualified. So we'll get an application from you, gather your information, you tell us verbally how much money you make, we look at your credit, and then we can figure out what programs you fit into right now. We can also determine if there's things you need to do to get ready to buy. So that's called the pre-qualification process. And I want to encourage everybody to kind of start there. Let's figure out where you are. We're going to tell you, yes, you're ready to buy, or here are some things you need to work on so you can buy in the future. And then as we go into that in a little bit more detail, understanding your credit score. That's one of the main drivers for purchasing a house is your credit score. It's going to determine if you can get approved. It's also going to determine your rates and your terms. And so here's a little bit about credit score. 35% of your credit score is your payment history. Do you pay on time? That's 35% of your score. After that, amount you owe. So how much total debt do you have? Is that installment debt or is that revolving debt? Revolving debt would be like a credit card. The big thing on credit cards is how much of your credit are you using? So if you have a credit card for $1,000, how much of that balance are you using? Anybody know the magic target number? 30%. Yeah, you want to be at 30% or less to have the biggest impact, positive impact on your credit score. If you're using more than 30% of your available credit, your score goes down. The investors think that you're a little bit more of a risk if you're using more of your available balances. So you want to try to keep your credit cards and your revolving debt under 30% of the balance. Any new credit that comes in, it's about 15% of your score. The types of credit that you have, if it's in revolving credit, if it's an installment loan, if it's a mortgage, that matters about 10% of the time. And your credit history, how long have you been using credit? How old is your credit bureau file? That's about 10% of your score. But all that adds up to drive your score. Okay, scores range from 350 all the way up to 800. 800 is top of the line. That's very good. In the mortgage business, we're looking at about 760 as a high score. Anything over 700, of course, is good. Median or average scores are probably about 680. How much money do you need to buy a house? We get this a lot. A lot of people think it takes 20% to buy a home. Not necessarily. Now, 20% is a good number because it waives the mortgage insurance requirement. Mortgage insurance is kind of protection for the lender. If you put down less than 20%, then mortgage insurance protects the lender in case that loan goes into default. But you can buy a home for much less down. The average first-time home buyer puts 6% down. The program we're going to talk to you about today only requires 2.25% as a down payment. So that number is shrinking. And then there's also down payment assistance available to help on the down payment as well. So how much loan can I afford? How much home can I afford? Your payment for a mortgage is going to be driven by 4 factors. It's going to include your principal and interest, your insurance, which is property insurance for your home, property taxes, and mortgage insurance. Again, mortgage insurance is different from hazard or property insurance. Your property insurance protects your dwelling. Your mortgage insurance protects the lender when you're making a smaller down payment. So those 4 factors add up to your total monthly payment. One thing we watch out for is based on the numbers, you may qualify for a maximum payment of, you may be able to qualify financially for a $500,000 mortgage with a $4,000 payment, but that may not fit into your budget or what you want to spend. So just because you can afford a home doesn't mean that's the right price point for you. How does it fit into your budget? What other things you have going on financially? You may need to scale that down, but we're going to tell you on the high end what you qualify for, and then you work with us together to figure out what you want to pay. Another factor in the process is calculating your debt ratio. So this kind of tells us how much home you can afford, how much monthly payment you can afford. We take all your monthly debts, usually debts that show on a credit report, like installment loans, credit cards, mortgage payments, car payments, all those things that show up on the credit report goes into your monthly debt calculation. And we're not necessarily looking at the total amount of those items, but the monthly payment on those items. We take that and we compare that to your monthly gross income. So not what you take home each month, but where you gross, what the big number is when you get paid. And then we come up with your debt ratio. So these are some guides. That's what you want your debt ratio to be or how you want it to fall in line. 36% or less. So if your debt is 36% or less of your gross income, that's a good target to be in. We can get you approved from 37 to 42. It's a little bit higher. In some cases, we can get you approved all the way up to 50% on your debt ratio. Again, that payment, how does that look to you? How does that realistically fit into your budget? But on the approval side, we can go up all the way up to 50%, in some cases a little bit higher, in some special situations depending on the program. But when you get that high, you're really using a lot of your gross income towards your house. So how much is left for maintenance and repairs and for other bills that you have and for your utilities? So that's, when you get that high, you really have to look and see how that fits into your overall budget. But from the lender standpoint, we can get you approved up to ratios 50%, maybe a little bit higher, 55, 56%, depending on the program. And then we talk about what's right for you. Again, we're going to talk about the Native American program we have here, but there's a lot of programs out there. There's down payment assistance. There's VA. If anybody is a veteran, you get a special program with no money down and no mortgage insurance. So what fits in for you? How much money do you have to put down? What areas are you looking to buy in? There's a ton of programs out there, but based on our experience and our expertise, we're going to help guide you to the right program that works for you. And now we're going to go into details about this special program. Any questions so far? Good. I'm going to give it back to Andy.
Thank you, John. As John said, there are 100 different programs out there, and part of this process is to put you and help you pick out the right program for your situation. But one of the main programs that we wanted to talk about today is the FHA Native American 184 program. On a typical FHA loan, you have to put 3.5% down. So if you're buying a $100,000 home, you have to put a down payment down of $3,500, right? 3.5% down. On the 184 program, it's just 2.25. So first off, it lowers your down payment requirement, which is great. The second thing it does is that a normal FHA loan requires that you pay a funding fee of 1.75% of the loan amount. So on a $100,000 purchase, that is $1,750. But on the 184 program for Native Americans, they reduced that to $1,000 or 1%. Then lastly, and most importantly, and the biggest benefit of this program, is we keep talking about PMI, private mortgage insurance, part of your monthly payment that you have involved in your mortgage payment. With the 184 program, you do not have the monthly mortgage insurance at all. So that's completely eliminated. So as you can see, the program itself it just makes the home buying process that much easier, makes your down payment less, and makes your monthly payment less. So it's a great program to consider. Now, is everybody in this room going to just automatically move to that program? Most likely not. There are so many different other programs that we want to make sure that we take a look at as well. Now, why are we here today and talking about this today? As we talked about at the beginning, the bank is in many different states. We're in Oklahoma, we're in New Mexico, and they've had this program for many, many, many years, and that is a big part of our mortgage department in those states. This program just moved to many counties in Texas 6 months ago. So 6 months ago, the program was expanded to some new counties. You'll see down there at the bottom, Bowie, Collin, Dallas, Denton, Fannin, Grayson, Harris, Johnson, Lamar, Montgomery, Red River, Tarrant, Travis, and Williamson. Many of those counties were not a part of this program until 6 months ago. So when it did expand, we started reaching out, and I was able to find Veronica. And so that's how we got contacted with this organization and able to be here today. So again, we've been a part of this program for many, many, many years, but now that it's been expanded to these counties here in Texas, we can offer it here as well. Great. So again, in order to qualify for that FHA 184 program, you must be a member of a federally recognized tribe. Beyond that, there's not much qualifications as far as just the initial outset. We would ask for a copy of your tribal card, and that's how we prove verification that you qualify for the program. This is for single family residences or manufactured homes. If you're looking at a manufactured home, it doesn't need to be a double wide. And so we have a lot of those that come about, and as far as in condos, it can be on or off tribal land. The loan can be used to purchase or refinance. So one of the big things that you're going to hear in the news today is that interest rates are higher than they have been over the past few years. We've moved from rates in the low twos all the way up to 7. I'm sure everybody's heard that. But most people feel that in the next few years, rates are going to come down. That they may never get to back in the 2s, but they might go from 7 down to maybe in the 4s or something of that nature. And when that happens, you're going to want to refinance from that 7% interest rate or 6% interest rate down to 4. And so we can help you with that same program when you refinance as well. It does need to be an owner-occupied property. So what that means is that you have to live in the property. This particular program is not for your second home, your lake house. It's not for an investment property. We have other programs to help you with those, but this is for your primary residence. And the maximum loan amount does adjust by county. It's high, so we most likely won't go above that, but there is some limits there. One more time, just to go over the benefits of the program. The down payment's only 2.25%. The down payment can be gifted. We see that a lot. So if you're looking to help your son or your daughter buy their first house, you can definitely chip in and help them with that situation. You could put additional down payment down, and we can use additional down payment assistance programs. So we talked just a little bit ago about there's 100 different mortgage programs out there. There's also a lot of down payment assistance programs. So just because you're putting 2.25% down doesn't mean we can't reach out to third-party organizations that help a lot of first-time home buyers with their initial down payment. And we have a number of connections with those organizations. The seller can also pay up to 6% of the borrower's closing costs. Now, we are currently in a seller's market, which means that going to a seller and asking them to pay for your closing costs may not happen a lot right now. But there are certain markets, and as times change, where you can ask the seller to pay for some of your closing costs. We're starting to see it today. So we're beginning to see where sellers are starting to pay closing costs. We have not seen that over the past few years. So we might be able to ask for some additional assistance and help from the seller to pay for some of the closing costs. I just wouldn't expect all of your closing costs to be for the seller. We can talk. Again, that says Bank of Oklahoma. It's just because we haven't updated the slide, but Bank of Texas offers a number of different programs. But the biggest piece of it is, one, we're a direct lender for these programs. There's a lot of lenders that offer this type of loan, but what actually has to happen is they review the loan and then they have to send it to HUD, the Urban and Development Office, to approve the transaction. We at Bank of Texas have done so many of these type of mortgage loans that they've given us the authority to approve it directly in-house. So there's not that extra step involved. Another big piece is, as we talked about earlier, every loan officer in this room has been doing this for at least 15 years, and I don't want to call anybody out, maybe 30, in so many organizations. So we've been doing this for a very long time, and we're very well educated in the home buying process. But we want to be here to kind of walk you through that process, because you don't go through it every day like we do. And hold you and make sure that you're taken through every step, as well as help you partner with the right team. Again, like we talked about earlier, the team is very important. Who your real estate agent is, who your insurance agent is, who your home inspector is. And that is very important, because we want to be there not only today, but 2 years from now when you have a question on your mortgage. Last piece is the other nice thing about Bank of Texas is that we keep the loan. So that means after you've closed on the house, you will continue to make your monthly mortgage payment to Bank of Texas. So therefore, if you have questions on your home insurance or your taxes or the payment, you don't have to worry about who to call. You just pick up the phone and call us, which is nice. This is everybody here today. We again appreciate Veronica. We appreciate the organization for letting us come out and speak to you. I'd be glad to answer any questions that you may have today. Yes, sir.
I told you before, I work with HFC. Some of our clients are disabled. How much of these programs can be done online?
Well, to be honest with you, it is very rare for us to meet a client these days. 100% of the process can be done online or over the phone. And so, you know, do we have the option and the ability to meet in person? Absolutely. But there are many times where we don't get to meet the individual in person. So they apply online, they upload their documents electronically, we take them through the underwriting process electronically, and then when it comes to closing, if they can't come to the title company, then the title company will send a notary to their house to physically sign. Does that make sense? Yeah. So yes, do we prefer to meet everybody face to face, and we love going to closings, so that way you can meet individuals, but it can be done completely online. Yes.
Can you go back to that slide that showed the counties that qualify?
Absolutely. Oh, right there. You went too far.
So that's Travis, as in like Austin?
Yes.
Williamson is round one.
Yeah. Oh, my God, I don't know.
Oh, did you?
She's trying to do math, actually. She could be quite long, right?
Yes, you can refinance into this program.
Oh, okay. She just bought a house.
Absolutely. Yeah, I'm hearing rumblings that this is going to expand even further, which will be very nice. Let's see. Angie.
Okay.
Yes. Oh, man. Yes. Everybody remember that on
Maybe it's close to 500,000 as a loan amount, so it's basically the same. Tarrant didn't call him there. Yeah, pretty much the Metroplex is all going to be it's what's called an FHA loan limit. So they're really going to be about maybe some weird number like 475, could be 512. I don't have it actually. Let me just look it up and I'll come back.
Yeah. One of her questions, she had two questions. First question is, what is the maximum loan amount? So that's an important question, especially in wonderful DFW. Our home prices have gone up quite a bit. Scott's gonna look this up real quickly, but I believe it's around the 500,000 range is the maximum loan amount for that 184. And that's why I like to mention there's so many other programs out there. Just because the 184 is not the one that we use, we can definitely look at some other programs.
The amount is 563,500. I'm just gonna talk like this. It's a lot easier than
563,500.
$563,500.
Right.
Come on.
Yeah. The other thing that was asked is there a maximum income limit? And the reason why she asked that is there are a lot of programs, first-time home buyer programs, where you can only make a certain amount. If you make more than that, then you don't qualify. For this particular program, the 184, there is a maximum income limit, which is a nice feature. Yes, sir.
Can you combine programs like the first time home buyer and this one, or are they separate?
You can, absolutely. So down payment assistance is typically offered by a third-party organization. And so you can absolutely combine the two. So you can get your down payment assistance through a third party. We have a number of them that we work with. And then combine that to help you with your down payment for your 2.25% down. Absolutely. Good question. Now we want to read the details of the down payment assistance. That's where the kind of the rubber meets the road. Is that you want to focus on what those details are, because a lot of those down payment assistance programs require that you keep the loan for at least 3 years. And if you pay off the loan before that 3 years, then you either have to pay it back or you have to pay a penalty. Sometimes it's 7 years. So every down payment assistance program is different. And we just want you to know the information up front so you're prepared for it down the road. But they're great programs.
There's a question in there.
Yes.
How long has the 180 program been in Texas?
6 months.
But this is new, right?
And this is new to us, and it's new for the Metroplex, and that's why maybe not necessarily heard of this.
Yeah, I was gonna say because even when I tried to, I guess, you know, the first time our law was trying to get my, I guess, my tribe has assistance with that too.
Right.
I guess the bank wasn't really familiar about even the private program that could be applied to.
Right.
This right here, like, we've already done the, where it's Texas, right?
Yes.
6 months, right?
Yes.
Well, that's why we have such a big advantage, and why we're basically here is because, you know, as Andy was saying, our parent company is VOK Financial based in Tulsa. And, you know, the slide said Bank of Oklahoma. Well, this has been an enormous program in Oklahoma for a very long time. But since we've worked and our bank is based in Oklahoma, you know, we are very, very set where places like Chase or Wells Fargo or Bank of America or other banks, this is a very new program, and it's going to take us quite a bit of time to be able to figure out, even if they're new, but because it's a big piece of our bank, that's why we're here. We have everything set up, you know, the process that's going, how to do the loans, our ability to approve ourselves, not have to sit it somewhere else, which delays loans, which that makes real estate agents not too happy. You know, we'll be able to close loans on time and be competitive. That's the biggest piece. Yes, I would say there's, when I bring up this program to other loan officers that I've worked in the past, they just, you know, I've heard of that, but they have no idea the process and everything. That's, you know, that number one piece is building your team, having someone that's experienced. You know, the one thing I would say that's a big deal that Andy brought up is the fact that we don't sell the loans off. So we service all the loans that we do. Well, you know, a lot of mortgage companies you're gonna go through, maybe a broker, maybe another, you know, company that's there, and they're gonna sell the loan off. So if you need help in the future, you have a question about your property taxes, your escrow, you want to refinance, we don't go away. You know, you're still gonna have whichever loan officer that you decide to work with, you got a phone number. You reach out to us. You don't have to call a 1-800 number, be on hold for 30 minutes. You know, so the cool thing is that we are there the entire home process, not just when the house goes to be signed and then I just keep, you know, because that happens a lot. You know, but that's one of the biggest pieces of, you know, building your team is having that level of customer service. Question?
You guys are like the only bank, because I've been looking into this program for a very long time. It is due to Texas lean area, but like I was telling John, it wasn't in El Paso. And so we were on the top. So this program had just recently expanded into all these other towns. But you guys, no other lenders, nobody else was here in headlines. And even all of my, you know, meeting groups where nobody knows anything about them, why doesn't anybody know anything? Why are you, thank you for having that.
It really goes back to our parent company, VOK Financial.
I
You know,
grew up in Oklahoma, so
yeah.
I was, that was my first day. Okay, so I know exactly what you're talking about.
Right.
And like, I've talked to so many people, and nobody knows anything. You guys do know what you're talking about, but none of these other guys have any clue. And it's really kind of hurt a lot of people, and put that, even answering basic questions on somebody across the street is actually looking for one. It's really kind of hindering. So, yeah.
Thank you. Absolutely, thank you.
Yeah, I have a real estate friend that she's like, I'm like, what? Sorry, she had.
So I'm a boomer city, so I'm You want to answer that? I'll be glad to.
Great question. He's asking about interest rates in the next 6 months or so. All the experts, and we're not experts on interest rates. Yes. Right now, currently they're not as high as they were. They're not as low as we want them to be. That's a generic loan officer answer. But typically right now, they're about high 6s, 7s right now in this program. At one point, they were as high as 8, so it's come down some. Rates are forecasted to get better as the year goes on. They're kind of pushing that back, but by the end of the year, they're forecasted to be lower than they are now. But those are what the experts are saying. So bottom line, it's an investment. We're encouraging people to make a move, get into the house as quickly as you can. Start taking advantage of the appreciation and value. When rates go down in the future, we can always refinance you into a better rate if that day comes. Being a bank customer, once you are a customer, when you go to refinance, we're going to waive some of the fees, make it easier for you to get into a new loan. So we encourage people to move now if you can.
I'll add to that just a little. I would say on a good day, you're gonna probably log in around 6.5%. On a not great day, you're probably gonna log in at 7.5% today. It's kind of where the rate range is. And like John said, they're expected to continue to come down as the year goes on.
Well, that's the biggest piece about refinancing is that as rates start going down, as John had just said, we have a loyalty program. So anyone that has a mortgage with us, we will eliminate a couple of our originating fees, which realistically saves you about $1,200 to $1,300. So the refinance is going to be a whole lot less. And generally speaking, especially if we're talking about it a year or 2 years out, the home should have appreciated a bit. You paid it down a little bit, so that should mean that we'd be able to roll those closing costs in. So we shouldn't be bringing any money at all to the table because we can roll that refinance, back into the loan.
Do you see any reason why they wouldn't qualify for financial benefits?
No, that would be a good program.
So one thing we should probably look into is there's nothing the organization has to sign, but if an organization, Intertribal community, decides to sign up with Bank of Texas, then we have provided free financial education classes on all different types of topics. How to buy a house is one of them, investing 101, how to build your credit. There's 15 different, different seminars that we put on. But as part of being on that program, you get $2,500 off your closing costs. So there's nothing that the organization has to pay in order to join that program. It's just telling us that they want to join. And from that point on, we can then apply $2,500 towards your closing costs, which would be another great add for the program. Yes, sir.
You were talking just a minute ago about the possibility of rates coming down. And that job may ask, some of our clients are either rent to own mode. Can you do work with people in a rent to own where they've been waiting for rates to come down?
Sure, there's really two different answers there. Absolutely. With any situation, we want to kind of take a look at where they are today, take a look at their credit today, take a look at their savings accounts today, kind of guide them through a path. Okay, this is where we are today, and this is where we need to be. And how do we go from A to B? If we're talking about a true rent-to-buy program, that's involved in the person who owns the house. And in that particular case, we need to make sure that renter pays their payment by check. Because if you pay by cash, then we have no way of documenting that they've been making those payments. They need to be either make it by check or auto direct withdrawal, so that way we can see those payments being made. We work with that a lot.
Any questions? I would say that's the discussion. We're here.
Or is it just varies?
Refinancing has everything to do about the cost of that refinance. I mean, realistically, if I could do an absolute free refinance, if you're dropping your interest rate a quarter, it's worth it. It's free. It doesn't cost you anything. You know, the conventional wisdom you may have heard back in the day was, well, you need to drop your straight 1%. You need to drop it 2%. No, it's all about the cost. If it's free and you can lower it, no reason not to. So, I mean, that's the discussion that you call us and say, hey, is it time to, realistically, I promise you, we're more than likely going to reach out to you and say, hey, we've been paying attention. Let me tell you how much we can save you, and I think it makes sense now, and once you make the decision. But, you know, the refinance has everything to do about the cost. That's what makes it make sense.
To be honest with you, we're real math dorks around here. And so we stare at this all the time. I mean, this is gonna be the cost of the refinance, and this is how long you're gonna stay in the home. So this is how long you need to stay in the home for it to be beneficial for you to refinance. And so we look at these graphs that kind of show a break-even point of whether or not you should refinance it or not. Like Scott said, we
First time my math was
Absolutely.
What I was gonna say, when you mentioned finance classes, our organization has something called Tribal and Finance.
Okay,
We've teamed up with a local credit union.
great.
They don't have this type of information for the tribal residents, so we definitely need to talk.
Yeah.
Come back out and, you know, talk about this definitely.
Great. And, partnering with credit union, we can do that as well if it needs to be joint, that's completely fine. And also, we're real good in the mortgage space. I'm not real sure if you want me to be your financial advisor for investments. And so if we're gonna have a, investment one-on-one class, we'll bring somebody in, as an expert in that piece. So, that makes sense. What other questions, Tony? Yes?
Since you guys are kind of leading the initiative for this program, are y'all considering making almost like this video presentation that each year?
Well, we've not thought of that. I haven't.
Thanks, Kevin. Really not a bad idea.
I'm sorry.
He almost didn't make it, so.
Yeah.
Hoping video.
I mean, like, the information that y'all cover is enough to, like, be interested. It gives enough where we can digest, think, and then if there's a great is to reach more, share it with the platforms and you guys are you guys are gonna be first on that footing to get more reach.
That'd be great.
We could just film ourselves and throw it on YouTube.
Yeah.
The presentation itself, we've sent to Veronica, and that can definitely be passed around. And we can share that. But I like the idea of having a video along with it. We can work on that for sure.
And y'all come out to another Tribal and Finance.
Absolutely. Any other questions you guys have?
So I want to clarify, that payment system, or is that something that you guys are all right now?
You should. Now, there's 100 different down payment, they call DPAs, down payment assistance, 100 different programs out there. Do I know the ins and outs of all of them? No. But I know, we know a good number of them. And so, yes, there could be a situation where you bring one to us that you've heard about, and say, hey, can you please do the research on this one to see if it's something that we should, look further into or not, and why. And we'll also share, which ones we work with on a regular basis to see if it's something we should use.
And generally, they're very county specific. There's gonna be some that are only in Tarrant County. There's gonna be Arlington, only does Arlington. There's gonna be ones in Dallas County, and Denton County. So, and there's ones that do Tarrant, Denton, Johnson, it just depends. So, I mean, we'll find you the right place depending on where you're looking to purchase the home. And generally, they're gonna have their own rules to the down payment assistance. Generally, they're gonna have you come in and do a educated court that usually doesn't cost anything. But they'll have you come in, give you some education, whole idea is to try to help you, get into a house. Sometimes where the house is located, if there's neighborhoods that need some revitalization, there's more money available to be given to try to, bring neighborhoods back alive. So there's a lot of programs, a lot of, it just depends on where you want to live, and then we'll find you the right people.
And would a client have to get DEP approval first before y'all can discuss any of those assistance programs?
Generally speaking, I think that would be all kind of within the same, when we have the initial conversation, one of the first things we're gonna ask is, where's the down payment gonna be coming from? Have you saved it up? Is it yet? Or do you need down payment assistance? So that's probably gonna be one of the very first things we talk about within the first 5 minutes of just starting a conversation.
And then doing the pre-approval after that?
We do a
Right.
pre-qualification
Or-
during that, because we do need to pull credit to see, because realistically speaking, there's too many loan officers that are out there that if credit comes back bad, then the answer is no. And the answer is never no. It's either we can do it now, or let's help you figure out what you need to do to get to the point where it goes through. So we have to have that credit pull to make sure, because we don't want you to go like Andy said earlier. You don't want to go around and find the most perfect house in the world and then get qualified and find out you can't do it, and then it's all disappointing. It's better to have that done first. Minimum credit score. Sure.
For this program, there is no minimum credit score. Now, that's very misleading. Just because there's not a minimum credit score, we to get into the 680s is probably a good kind of goal to get to at least. But really, what this program is looking for is not necessarily a credit score, but more of a credit history. They're going to look at, do you have a number of collections that you haven't paid? Have you been late on, your car loan and things like that in the past couple of years? They're going to take a little bit more of a deep dive and see, what you paid on time and what you haven't paid on time. So we have individuals that don't have any credit at all. That's actually a good thing, right? Because there's no negative. So it's really about the positive versus the negative in the ratio there. And so that's really what we're going to go through and discuss, picking out programs.
Do y'all have, will that assist with those that need credit help, or will it refer out?
It depends on the situation. There are many situations that the 5 of us, including Sarah back there, I don't know if everybody saw Sarah. You probably introduced Sarah. Sarah is our assistant. She does most of the work in our office, so you'll hear from her quite often. But there are many credit situations that since we've been doing this so long, can walk you right through. Now, there are some that need a professional credit repair individual. And so, yes, we have, individuals that we know that companies that will do that as well. But we have a program that we type in, what credit score you need. Let's say you're at a 630 right now, and we want to try to get to 680. We plug that in, and it tells us exactly what you have to do to get to 680. It's a great program. It's very cool. Now, there's some situations though where we need help. So, but most we can help them ourselves. Yes, sir.
Can you use this program to build a house? Like you have the land that you need to build?
Unfortunately not. Now, if you're buying in a neighborhood and there's a builder building the house, but they're providing the financing to build the house, there's many of those around here. D.R. Horton, 100 builders around here. We can use that program for that situation. But if you have a plot of land, outside of town and you want to build a custom home on it, then that's a completely different program. And unfortunately, you wouldn't be able to use this program.
Now, theoretically, we could do the permanent financing, because what you would do is you would get a construction loan, and then you would use that construction loan to build the house. And then once you're about 60 days from the home being completed, technically speaking, we would be refinancing that construction loan. But it really just depends. we might not really use that program this program in that instance, because generally when you're building a home in that way, you have built-in equity because you kind of save some money that usually DR or Lennar would make as profit. So you probably generally saved a bit, and that would be your down payment per se. So, but absolutely, we can talk about all those ins and outs.
Yes, sir.
So are you available, can we arrange for you to bring this program out to?
Oh, yes. Yes, sir. Yes, ma'am.
So I was gonna mention that I took a couple of classes on truck in December. And one of them, it took class, and we call it boost class instructor, that we are to go speak with three lenders, you can qualify to your credit being that in. And I think the problem is, what if you're trying to talk to a lender, they have no clue about lending or home loan? Do you have a listing of any lenders out there that are knowledgeable and they have no clue? So that's why this is really important. Talking about, there's a lot of good names, for instance, lending out there that they really don't. And that was my biggest concern was I don't really want to go talk to three different people. I work really hard to get our credit, but I don't want to have to do all of that. I want to go talk to one person and have everything right there on one of those situations.
Yeah, that's,
Yeah.
you know, I'll give you I'll expand on that just a bit. So shopping around for a mortgage is a good thing. Shopping around for anything is a good thing. This is a huge investment, just like John was talking about. This is how we generate wealth, especially through generation of is buying a house. So talking to multiple lenders is not a bad thing. And if you pull your credit, in a mortgage credit report, you have 10 days to have multiple lenders pull that credit report, and it only shows up as one inquiry. If you go past that 10 days, then typically it shows up as a new inquiry, which could pull down your score. You don't want to do that a lot because your score can come down. Now, pulling a mortgage credit report doesn't pull down your score as much as a credit card or JCPenney or something of that nature. It still pulls it down. But more importantly, like what you're saying, if you talk to 3 or 4 lenders, unfortunately, in a lot of cases, you just get confused. This person said this person said this. It's hard to kind of put it all together. Some people can talk to 10 different lenders and keep it all straight and, get it all down the road and they're just fine. I don't have that time. And so, yes, I would, shopping around is good. Just make sure that, you're also being able to keep it in mind what you're being paid. That makes sense? Good, very good.
Yeah, and I would add to that too. So when this program came out and got expanded, we went and Andy did a great job looking for connections or places that we can make this presentation. You guys know who do we need to connect with. So please share that information with us to get us connected, and we'll be glad to come out and make this presentation to those folks. So you can help us in that way. Get us connected with the right people, the right organizations, and we'll come out and bring the information.
Mine was Cherokee Nation, so they're in Oklahoma, so you should go talk to them.
They have a chapter here in North Texas.
Oh, they do?
We can probably connect you.
Yeah, that'd be great. Yeah, I started on Facebook. I started searching for everywhere. This is
Our organization is one of the largest community organizations in town.
great.
So yes, I would definitely like for you guys to come back out and do another class. My phone keeps on going off because everybody wanted me to get some information. Because they want to buy homes and, it's hard. It's been a lot of those stores where, people misgets. So you guys offer this help and I'm ready to give you guys my kids' social security.
Well, that
That
is
part,
the,
they're in my house. They need
need to get that out. That is the big first step for
Yeah.
everybody that's looking to buy houses. They need to have a one-on-one consultation with one of the lenders. what we have found too much here recently is somebody just goes and applies online, never has that 20 minutes to just talk through the process. That's something that we make every individual do, even though it's not a quote unquote requirement, because there's a lot involved in this process. And we want to make sure that 6 months after you buy the house, that you're not, oh, should have done that, you know? So we want to make sure you understand the process and figure yourself.
Before we wrap up, I just want to take a minute and recognize our humble leader here, Andy,
Oh, yeah.
our facilitator today. He runs mortgage for Tarrant County, and he's a great leader. And he put this together with Sarah and Veronica at this organization. And he's too humble to take credit himself, but he did a great job today. Thank you.
Thank you, ma'am.
Absolutely.
Or like maybe we could even, link that would give them more information.
Absolutely.
I'm already thinking about something on that. They were looking, but had a hard time getting through with the, feeling that 2% or 1% would really help them, in buying a home and they just have it. It's tough to do, but, something like this would be
We definitely put something together. So Sarah back there, that's most of the work. We can put something together.
Well, and I imagine everyone did, on the side of sheet, put down email addresses and all that, because that is how we're going to be communicating and sending all that information to you, so you have all those information.
You guys can send, you already have Veronica's contact, you can send any of those links to her, she can share it on our website and on our page.
Yes. We also have a community calendar on our website and a lot of the organizations put their events on there. So you can look on there and see have a lot of events.
So I'm glad you brought that up.
Just remember us when you're out and about.
We do a full 4.5 hour home buyer class, typically 3 times a year. And there's one coming up soon, you know, that is, it's an in-depth class. Like I said, it's 4.5 hours. And we bring in all the team. So we have a real estate agent come in, we have an insurance agent come in, home inspectors come in, just so you can understand the entire process. On that, we're not really talking a whole lot about the different programs. We're talking about the process.
Great.
Any other questions? Thank you so much.